Well, hello and welcome to the Christmas trading week right here in Lagos, Nigeria. I hope you're feeling the Christmas vibe, regardless of high prices. Hopefully your disposable income is resilient at this time. But let's get to the top stories I set to agenda now. I'll see Nigerian foreign exchange market. It's all mixed results for the last trading day last week, with NAFEX rate appreciating, while the CBN closing rate, that depreciated slightly there, but 0.03% end from the close, 1,536 naira from previous close of 1,537 naira. That's for Friday. For the NAFEX window, 1,548 naira. Maybe we might get a Santa rally in the FX market. That would be nice to see, definitely. Meanwhile, the Central Bank of Nigeria has reported a 2.97% increase in net foreign exchange inflows to the Nigerian economy during the third quarter of 2024. The inflows stood at $14.46 billion, down from about $14.89 billion recorded in the previous quarter. While this represents a quarterly decline, the inflow, that significantly increased by 75.91% compared to the same period in 2023, when it was about $8.22 billion. To the oil market now, oil prices inch higher today, tracking a broader rally in risk assets. This positive movement comes after the release of U.S. data showing a cooling in inflation, 0.4%. That's the rise for Brent crude, $73.20 a barrel. While U.S. grade WTI, that's staying under the $70 psychological level, up 0.5% to start the week. We've seen this happen before in previous weeks. Starts in the green, then subsequently we'll see a pullback. But it's a holiday shortened trading week this week. So we'll see how the few days of trade play out for this week. All right, we see the Nigerian National Petroleum Company Limited has reduced the ex-depot price of premium motor spirit, commonly known as petrol, from 1,020 naira to 899 naira per litre. This price adjustment follows a recent similar reduction in the price of the commodity by Dangote Refinery. The National Public Relations Officer of the Petroleum Products Retail Outlets Owners Association of Nigeria, Mr. Joseph Obele, made this known in a statement, says the move by the two major petrol suppliers led to increased competition in the downstream sector. He commends both the NNPCL and Dangote Refinery for responding to the association's call for affordable PMS prices, and said it will ensure that the benefits of the price cut are passed on to the end users and that the overall downstream sector remains stable and conducive for business, especially during the festive season. And also, still talking about the Dangote Refinery there, it signed a partnership with MRS to sell petrol from its retail outlets nationwide at 935 naira per litre. That's according to the president, Dangote Industries Limited. Aliko Dangote is a positive impact of the Naira for crude swap deal approved by the president, Bola Tinubu, according to a statement released by Dangote. The new price has already commenced in Lagos and will be offered nationwide from today. Dangote recently reduced the price of premium motor spirits from 970 to 899 naira at its refinery loading gantry in September. So much movement there when we talk about PMS prices, and definitely we hope that it continues at this point so that other prices can actually drop going forward. But this is still developing at this time, and we'll still keep tracking. All right, to our first conversation now. We see Nigeria's been grappling with a persistent food inflation crisis throughout 2024, significantly impacting household budgets and the overall economy. As the Yuletide season is upon us at this point, concerns are mounting about the potential for further price increases and their impact on consumer spending. Joining us to unpack this now, we have Mr. Tunde Banjoko, as a Managing Director of Banjoko Farms, joining me right here in the studio. It's great to have you. Good morning.
Thank you, Laddie. Good morning.
I hope you're feeling the Christmas vibe somehow. Compliments of the season. And so I'm sure you've seen the developments with petrol, at this point, since we're going sub 1,000 naira.
Yeah.
And I don't know if we're starting to feel the impact on the farms.
No, we can't yet.
Not yet.
Of course, it started today.
Right.
So I think the price 935 starts today.
Right.
So of course we can't feel it today. Okay.
So I'm sure as the
hopefully if that can be
progresses,
sustained for some time, it should have some little effect.
Little
because I said little because looking at what did we start with at the beginning of the year, 670, 650. We went as high as 1,100. Now going back to 935, would have just been. We can't go back to where we were in January. So except we go back to where we started in January, then we can see a significant effect.
What would you say is the ideal price that we should be looking at per liter
200
that would
naira.
drive the prices down significantly?
Maybe
let's not be Oliver Twist. Let's say
maybe
realistic.
We should go back to like a 400-500 naira per liter. That's when we can see like a significant shift in the cost of produce, because you ask yourself, how does this fuel affect us in the agri sector, for example, is in transportation. So a trip that I was to bring a truck from Jos last week, and I was charged 1.8 million from Jos to Abeokuta. So if you are just removing 20 naira, 17 naira, thereabout, it might not give you that huge margin. But assuming it's half the price, then instead of paying 1.8 million, I'll be paying maybe 900 a million. And that's when the customers can also have the best of price.
And I guess it's quite tough for CNG to act as that alternative for most of these.
I think there was even in the paper today, the tanker drivers were protesting that they've been excluded from the CNG arrangement. So if they can include the tanker drivers, the big lorries into that CNG arrangement, that's when we can also start seeing that shift. Yeah.
Do you think we should start exploring maybe subsidy for logistics when it comes to agricultural sector? How would that work really?
How it will work or how it will start is by looking at the vehicles we use for agricultural transportation, for example. We use trailers most times, and these trailers work on diesels. So if we can move them to cheaper source of fuel like CNG, if we could start using train to move our products, this will be a good alternative to drastically. But as long as we are using petrol to move these products, using diesel, and we are still buying at this current rate, we'll still be struggling with this.
So to just paint a picture for me, so far this season, moving goods from the farms to the markets, what's it, looking like?
It's been challenging, like the example I just gave, it's been challenging because of costs. So you have clients who would have bought more, but because of cost, they are turning down orders. Because by the time they add the logistics to what they have in mind, the budget is not adding up. So it's made transaction a bit slower. So you also look at the agric. Look at how much they are selling chicken yet now, average of 20 to 35,000 naira for one. So how many people can afford it at this time? So this period, some people, challenged me in church yesterday and said, why is it this high? I said, it's really not the fault of the farmers. It's the input going into the feed of these birds. That is. So this season, and a lot of farmers too, they are not happy selling at these rates. That's the truth. And what people also don't know is that farmers are also not making profits, even at these high rates. That's the irony of the whole thing.
Because most of the time, you feel like there's some kind of profiteering, also going on, even though we know input.
But the input has really, let's give an example of maize, which is a major component of feed. Maize at the beginning of the year was average of 430,000, 420,000 per ton. Now doing about 750,000, 800,000 per ton, just in 1 year. So demand is low, but the input into the production is what is really causing this stuff. You also look at rice. At the beginning of the year, local rice now was about 45,000 per bag. Now it's doing about 95,000. But farmers are not making any huge profits. Most farmers are barely surviving at this time.
Right, because I miss the taste of live chicken.
Farmers, I'm sure the farmers wish they could just give out the chicken as cheap, as affordable as well, but the cost of input at this time. And you also look at, I'm involved in this thing, you look at the cost of funds for those who even try to produce, the cost of fund is not cheap.
All right, let's look at the budget now.
Okay.
For 2025, we know where the majority of the monies is going to. That's the defense and all of that. But looking at the 2024 budget, it was about 362.9 billion naira. That was budgeted for for the agricultural sector. That's about 1.32%. Okay, so looking at the 2025 proposal at this point, what do you think should be going into agriculture? We're seeing defense still getting a major chunk.
No,
should it still be that way?
No, they've given us the budget already, 862 going to agric.
862
billion. And it's still about...
So it's above,
No, in terms of percentage, it's still about 1.3 or 1.2%. So it's not that we've gotten any significant increase. For example, as a farmer, I'm not happy with that budget on two grounds. One, about 10 ministries got above 1 trillion. Agri should have gotten above 1 trillion. That's number one. Some ministries that I'm wondering, they don't do budget, they don't do projects. Ministry of Finance, Ministry of Budget and Economic Planning, and all that. So why would they even be getting more than Agric? Agric will split their budget into research institutions, universities, and then the ministry itself take a quota of it and then plow back maybe 20-30% into production, which is always low. I think something we've been clamoring on for years is this Maputo and Malabo declaration that give at least 10%. I was thinking minimum Agri should have gotten 2.5 trillion from this current budget if we are really serious about changing the numbers. If ministries who are probably not doing project and stuff like that just for overhead are getting above 1 trillion. Then the ministry we are so concerned about, I looked at the 2023, revenue from agric exports, from our exports. We made about 1.23 trillion from agric. 3% thereabout over foreign earning. So that kind of ministry should be given more attention, in my own opinion. But
seeing that, it's been said that security is a major issue.
Security, fine. Infrastructure, fine.
Agriculture,
health, fine. Education,
so if they solve those problems, would that should
it will have effect.
Have an impact?
No. Definitely, solving insecurity issue will have significant effect in our production. So that's why I'm not objecting to the funding. The only issue I have with that is that implementation. Because they've been getting all sort of high allocation, and yet we are still battling with this thing for years. So I'm also just looking at implementation. And then my own concern also will be, while 862 billion is not enough, I'm also now more interested in the implementation, execution, because that's always been the gap. Not even the amount. It has always been, for me, the gap.
Like, how is that money realistically spent?
That's really the gap. And you look at the promises in the last, I'm not going to even go back to the last 10 years. Let's just look at 2022, 2023, 2024. First quarter 2022, Nigeria did this, green imperative project for years now. We are expecting tractors from Brazil. Till now, first quarter 2022, the then president said the tractors will be here now. 2022 gone, the administration ended. Sometimes this year, August, the president said the equipment from Brazil, Belarus, the US, they're almost, as if they're on the IC almost here. But 4 months after, we can't see them. We're talking of mechanization, but we can't see this equipment. You also look at rural infrastructure. There's this new $500 million from World Bank. We are dropping 100 million. So, but we keep asking, and I'm shocked seeing that 16 states already participating. I'm wondering, where are the roads? Where are they doing them? So I'm more concerned about implementation. If we can start working on, last year also the president said 500,000 hectares will be cultivated. After some months, the minister said 246,000 has been cultivated. They did cassava in 30 states, grains in 15 states. If this thing truly had been done, I'm not sure we should be where we are.
Right. And, talking about where we are, right now, what should we be taking? As 2024 is winding down, going into 2025, seeing that the president's projecting about 15% inflation, and hopefully lower food inflation, going into 2025. What should we be doing from now into 2025 so we have a better Christmas in 2025?
So I think the first thing is just to focus on implementation. I think there's too much talk, like I said, and the president was also very optimistic in August. I think during the strike, during the protest, they're about to say, we are not even just doing 500,000 hectares, we are doing 10 million hectares. That's very ambitious. If we do even 500 to a million hectares, we shouldn't be experiencing what we're experiencing now, because we should be able to push up production. So if we can push up production, not allocating resources to just recurrent expenditures, salaries, overhead, if we can push more into production and be sincere about it, I think, to me, the measure of any industry is not the paper or what you say, is what the people, the beneficiaries, the consumers are saying. Like in some other ministries now, maybe I should give an example if I'm allowed. You look at the Minister of Interior said, after this time, passport issuance will be this way. After some months, passport issuance was after that order. People now giving testimony that, no, I had to go to Abeokuta to do my last renewal because of the bureaucracy. But now you can apply. The procedure is simple and easy. So that's the same thing. This thing is not rocket science. So that's what I struggle with. To bring down the cost of food in Nigeria is not rocket science. All we need to do is implementation. All that have been allocated. We also talk about the dams, that they want to work on the dams, the water infrastructure, but we are not seeing all this come to play. Right. So if we can, to make 2025 different from 2024, we'll look at how we can allocate more into direct production. If the feed, like I made an example of feed, can come from 750, 740 and reduce to maybe 400. Look at the last policy talking about removing tariff from some imported product. But that was just for 6 months, which ended already in December. And before even December, it took about a month or two fine-tuning the papers.
Right.
So how would you not have
the government is definitely big, on ambition, and we definitely hope that we'll get bigger on implementation.
Yes,
thank you so much.
Thank you.
That's Mr. Tunde Banjoko, who is the Managing Director of Banjoko Farms. Thank you for joining us and wishing you a very Merry Christmas.
Same to you and to Arch and Esteem. Thank you.
Thank you so much. All right, we'll take a break now. When we come back, what to expect? That's for investments in 2025. That's our next conversation. Just stay with us. And as 2025 nears, Nigeria stands at a critical juncture, grappling with economic challenges, including high inflation, currency volatility, and infrastructure constraints. However, amidst these hurdles, opportunities abound for investors. Let's delve into the key factors shaping 2025 investment outlook in Nigeria. Join us for this conversation. We have Mr. Ayodeji Ebo, the MD Optimus by AfriInvest. Join me via Zoom. Great to have you in the show. Good morning.
Yeah, good morning.
Yeah, so Mr. Ebo, it's all about using 1 naira to turning 1 naira into 2 naira at some point. But definitely, we know the macroeconomic headwinds can make that a little tricky. So talk to me about key macroeconomic factors that will shape the investment landscape in Nigeria for 2025.
Okay, thank you. So I think it's been an interesting year so far in 2024. But looking forward, some of the major factors that would shape the investment landscape. The first one will be the FX policy, so which is going to be around liquidity and stability. So you would observe that for most of the quoted companies within the manufacturing, telecommunication sector, this year suffered, and last year also suffered significant FX losses, given the mark-to-market that they will have to do, and also the impact on their costs. It was really very impacted them negatively. So what we expect that would help is by next year, if we see that stability, we expect that most of the companies that have been suffering this significant major gap and it has been impacting on their bottom line, some of these companies would do very well and present good investment opportunities in 2025. We also need improvement around stability in policy. So a lot of policy inconsistency also send negative signals to investors. So I would say that around the FX policy, if we are able to see that with some of the new on the back of some of the new policies around the B-match that has been introduced this month, and given the stability we are seeing, if that is sustained, we will begin to see more influx from foreign portfolio investors. And this, beyond the liquidity it creates for the CBN in the short term, it would also boost asset prices also in the short to medium term. So these are also positive themes that we should also be looking out for. And lastly, that we just mentioned amongst others is that we need to see more clarity in policy. So like even your last guest spoke about, yes, we have a lot of very interesting policies, documents, or policy documents, if I would say that, but we need to see the implementation and measurement of the performance, the impact across several sectors. There's a more need for collaboration with private sector, and there must be clarity around how private sector can come up and be protected. So beyond just the current government, what are the things that can protect them when they invest or partner with government? Because when you look at the budget that has just been proposed, there's a limit to what government can afford to support. You look at the last budget performance for this year, as at August, we've only spent about 5 trillion on capital expenditure. I think it's about 3 trillion on capital expenditure, which left a gap of about 5 trillion. Yeah, so you would see that it's always at the receiving end. So if we don't deal with this, it's also the investment climate cannot perform optimally in isolation of an economy that is dragging.
Okay. And, talking about an economy dragging, 2024, we've had the macroeconomic headwinds. We've seen, central bankers, in global markets there, cutting rates, trying to bring down, lending rates. But with all of this, with all that's played out in 2024, we're still seeing indexes, hit new highs. A couple of indexes in the U.S., they hit, levels they've not seen before. We're still at 100,000 for the equities market, over 100,000, I think, for the last trade. We're seeing asset classes like Bitcoin, risk assets, hitting new highs in this, same 2024. So, talk to me about what we've learned so far, in 2024 as investors, and what we should take into 2025. Do these risk assets continue to rise in 2025?
Okay, very interesting angle to that. So what we should, one of the takeaways is that even when there are challenges and volatility, that is also where the opportunities are also are. So we should pay attention. How do we identify the opportunities? So you would see that for a larger part of the year, you spoke about cryptocurrency. Before the emergence of the President-elect Trump, the cryptocurrency has just been up and down, and before we saw that major rally. Even for the U.S. market, it's for some of the stock would have to be spared. When you look at even the ETF, that Vanguard 500 that measured the top 500 companies have gained about 20% this year alone. So that it presents opportunities, but there will still be volatility. So entry time and exit time for investors, if you are not the long-term, you need to have your exit plan when you come in. You understand your investment strategy. When you see stocks, so you look at the likes of even Apple shares, Tesla, they got to almost all-time high, and before they also reversed. So investors, if you have to maybe split your portfolio, have the short-term portfolio and have the long-term. For the long-term, whether it's going up and down, you continue to average down on those ones. And for those that are short-term, when you see that you made significant upside, there are stocks that people have gained even this year close to 500%, both on the New York Stock Exchange as well as the Nigerian Exchange. How did investor react? For those that are smart investors, when they see that they reach a very significant upside, they take profit and look for the next opportunity. So these are some of the takeaways that I think next year will be more volatile. If we take a record of during the last administration of President Trump, there was a lot of volatility in the markets. That doesn't mean market may not still go upside, but you need to be able to time the market. That would be very important. And coming to Nigeria, we believe that there are still very specific sectors that would still be very defensive and do very well next year.
Right. All right. Talk to me about trading trends in 2024. How are investors buying, stocks in Nigeria? Are they using more of the apps, or was it, the regular way through, meeting of the stockbroker? Because I know now the youths are big on, apps, for buying stocks and all of that. How would you describe adoption this year?
I would say it's been very impressive, because even for us, with looking at our Afro Investor app and the Optimus app, the interest, because of the ease of the ability to execute trades on your own, you're able to see the market, you see the bid, you see those that are trying to buy, you see those that are trying to sell, and you're able to set your limit. You think you are comfortable to buy at a particular price. So that has created a lot of interest. So measuring that interest even for our own, we doubled in terms of sign-ups, doubled this year, which we think that is going to be the trend going forward. For the younger ones, they don't want sending mandates and waiting for what is going on in the market. Some of them are paying good attention to the market. They understand technicals, and they just need a bit of support on the fundamentals, and they know they are able to use some of the experiences in cryptocurrency and their FX trading to also come and see how they are able to well time the market. So we think that would continue to improve. We feel the regulators also are providing that support and that encouragement. So as what I think we need to add on top of that next year is providing data and investor education. Right. So when you look at percentage, it's still less than 1% of the economy that still invest in the stock market. So there's still a lot of opportunities in that space. But before that can improve, you compare to the US market, where you can go on the likes of the Yahoo Finance, Google Finance, get data, free data to understand the stock you're investing. The Nigerian market, you pay a lot to even access that data. So there's a lot that needs to still be done on that for us to attract more people. But I can say that categorically that it's been very positive. The adoption has been very encouraging.
All right, we'll keep tracking to see how it grows for 2025. Thank you so much. It was great having you, Mr. Ayodeji. Mr. Ebo is the MD Optimus by Afro Invest. Thank you so much. All righty then, so we'll give you a summary of what's playing out. Major markets that we track, that's at 1 p.m. on Business Incorporated. Inijomek will be here for that. Thank you so much for watching. That's it from me on Business Morning. I'm Ladi Williams. I hand things over to the Sunrise Daily team.